Imagine a parent company cutting off financial support to its subsidiary, but deciding to keep the collaboration alive. That's exactly what happened when Volvo announced it would stop funding Polestar. Now, Volvo and Polestar, two brands known for their innovative strides in the automotive world, are set to navigate a new dynamic. Volvo's decision to cease funding doesn't spell the end of the road for their partnership. Quite the contrary, the two brands will continue to collaborate on manufacturing and research and development, driving towards a future that's as electrifying as their vehicles. As for the financial void left by Volvo, it's set to be filled by Geely. The Chinese automotive giant, which owns both Volvo and Polestar, has stepped up to provide full financial and operational support to Polestar. Interestingly, this move could also see Geely becoming a significant new shareholder in Polestar. So, while the financial umbilical cord is cut, the collaborative ties remain intact. Now, what does this mean for Polestar? Well, it's a bit of a mixed bag. As we delve into the impact of Volvo's decision, it's clear that Polestar faces its fair share of challenges. Being an exclusively all-electric brand, Polestar is navigating through a time of global decline in EV sales. This, coupled with a rather limited lineup and slow rollout of new models, has led to some financial turbulence for the company. Polestar's single model currently available in the US, the Polestar 2, is facing stiff competition. And with two new EVs on the horizon, the stakes are even higher. The financial strain is evident. Since Polestar went public back in June 2022, its shares have plummeted by more than 83%. But it's not all doom and gloom for Polestar. The company has shown resilience and is proactively addressing its financial woes. It has significantly reduced its expected external funding need to approximately $1.3 billion, with a target to reach cash flow break, even by 2025. Progress is being made to secure the extra external funding needed. This, along with Geely's pledge for full financial and operational support, serves as a beacon of hope for the brand's future. While the road ahead may seem rocky, Polestar is not backing down and is gearing up for the challenges. So buckle up, because the ride is just getting started. While Polestar may be bracing for impact, Volvo, on the other hand, seems to be reaping benefits. In the financial arena, Volvo's decision to stop funding Polestar has been met with a wave of positivity. Following the announcement, Volvo's stock experienced a significant surge, rising by more than 30% at market open. This is a clear testament to the market's confidence in Volvo's strategic decisions. The move to cease funding was seen not as a step back but as a strategic maneuver to bolster Volvo's financial position. But wait, there's more. Volvo isn't just sitting on its newfound gains. The Swedish automaker announced a proposal to distribute 62.7% of its stake in Polestar to its shareholders. If approved, this move will leave Volvo with an 18% stake in Polestar. This is a strategic decision that not only rewards Volvo's shareholders but also ensures that Volvo retains influence over Polestar through its smaller stake. It's a win-win situation. Volvo's CEO Jim Rowan has expressed that it's logical for Volvo to retain influence through a smaller stake in Polestar, given the significant operational collaborations between the two companies. In the business world, one's loss can indeed be another's gain, as is evident from Volvo's soaring stocks. The decision may have been tough, but it's clear that this financial reshuffling has put Volvo in a position of strength. The financial ties may have been severed, but the future of Volvo-Polestar collaboration remains promising. Despite the financial split, the operational collaborations between these two giants of the automotive industry are set to continue. This includes key areas such as manufacturing and research and development, vital components in the ever-evolving world of electric vehicles. Even though Volvo has decided to cease the funding, the Swedish automaker is not entirely washing its hands off Polestar. They are retaining an 18% stake, allowing them to maintain influence over Polestar's strategic direction. Meanwhile, Polestar, with its exclusive focus on EVs, will continue to benefit from the shared resources and technical expertise that come from this ongoing collaboration. So, while the financial landscape has shifted, the operational terrain remains largely unchanged. It's clear that while their financial paths diverge, Volvo and Polestar will continue to walk hand in hand operationally, charting the course of their shared future.